Hello, good to see you again. I am Richard Ong, Tax Advisory Partner of RSM Singapore. As a follow-up from our last video, we will be sharing through this installment what constitutes a supply from the GST perspective, as well as the 3 misconceptions about what a supply is. This will aid all of us in better managing our GST reporting to minimize incorrect classification. Let us start off with the first misconception. A sale is equal to a supply. In fact, a supply is not the same as a sale. Using a circle as reference point, a sale refers to a subset or a portion of a supply. As you can see on screen, a supply refers to the full circle and not a portion of a circle. When we think of making a supply, we often associate it with selling goods or services. But a supply under GST is broader than that. A supply will be triggered when 2 important factors occur. First, goods and/or services are made available from party A to party B. And in return, party A receives a consideration from party B. The consideration can be cash, barter trade, or a combination of both. A sale is a type of supply, yes, but the term supply also covers a wide range of transactions beyond just selling. For instance, a gift, barter trade, recurrent expenses, or even a private use of business asset, which in certain circumstances may trigger a deemed supply for GST purposes. So it is not just about making a sale, it is about what happens in the course of the business activity in tandem to the 2 factors discussed. The second misconception we commonly hear is raising an invoice or recognizing revenue in the accounting books are necessary for a supply to occur. Going back to the 2 factors we discussed earlier, a supply will be triggered when goods and/or services are made available from party A to party B, and in return, party A receives a consideration from party B. As you can observe, there's no mention about the need to raise an invoice, nor classifying it as a revenue item for a supply to be present. For example, should a GST registered business be interested to trade in an existing machinery for a new or more advanced one, it might not raise an invoice, nor consider the trade-in value as its revenue. Notwithstanding this, the GST registered business will be considered as making a supply, as first, it makes available the existing machinery to the vendor who is willing to allow the trade-in. Second, in return, the GST registered business receives a consideration through the trade-in value of the existing machinery, which was subsequently used to offset the purchase price of the new machinery. We could see from the earlier illustration how a supply could be triggered through trade-in transactions as well. Finally, it's interesting to note that an expense transaction could trigger a supply as well. You might be thinking, how can an expense lead to a supply? Let me give you an example. Imagine a GST registered business who bought a country club membership and parked the cost incurred as an expense. After holding the country club membership for a few years, the GST registered business decides to let go of the membership and receive a consideration of $250,000. There is no invoice raised, and the $250,000 was parked back into the expense account as it is not the revenue item. This caused the membership expense account to show a negative balance. For the mentioned example, the GST registered business did not raise an invoice nor take in the $250,000 received as its revenue item. Notwithstanding this, a supply transaction has been triggered in the process through the GST registered business making available the right to the country club membership to party B, the one who took over the membership. And in return, the GST registered business received the $250,000 as a consideration and it parked it back to its expense transaction. This highlights the importance of understanding that an expense transaction could trigger a supply in tandem to the 2 factors discussed. In summary, we have learned 3 important factors of a supply. First, A sale does not equate to a supply. A sale is only a portion or a subset of a supply. Second, there's no need to raise an invoice to recognize it as a revenue item for a supply to be triggered, so long as the two important factors which discussed earlier are present. Last, an expense item could trigger a supply transaction as well. I hope you have liked what we shared today and find it useful. Please remember to like, share and subscribe to our video for more content on GST and other tax matters. I'm Richard Ong from RSM Singapore and I look forward to seeing you in our next video. Bye bye.